Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. A wonderful day to do some technical analysis. And in today's video, we're going to be covering Bitcoin, Ethereum, Cardano, and Marathon. I'll be looking at the shorter term picture as well as the longer term picture so that we've got as much information as possible to make the best decisions going forward. But please remember the polite reminder that nothing in this video should be taken as financial advice. Everything in the video is for educational purposes only. Please do your wider research before you make any investment decisions. Okay, so we'll start off with the daily chart, and in the last few videos, if you've been watching them, you'll know that I've been drawing this very strong resistant channel here based on this rejection here and this support here, which gives us this 43,000 resistant point. And I've been saying in the last few videos that when we come down from here, we will find a strong resistance at the $43,000 mark. And before it did that, I drew these three lines here that when we come to the 42,000, we're going to get rejected, and we use the Fibonacci retracement to draw these three support levels. The first one was based on the 38.2, the second one was based on the 50%, and the third one was based on the 61.8%. Now, when we had a look at the strength of this rally here with 10 green candles all in a row, and these are 10 daily candles, prediction was that we would come up to this level here, which was the 37,500 at the 38.2. However, as the rally was coming down, the strength of this with the four red candles, it was coming so fast, we thought it may just actually push its way down to the 50% level. However, in the last video, if we zoom in here, you can see that we came and hit the 38.2% level, and look at this bounce here. We've had a very strong bounce to the upside. The question now is, now that we've broken the 43,000 neckline here, where do we go now here? Before we go to the levels, to the upside and the correction levels, you may have noticed something quite intriguing, and that is we had a cup, and this formed our handle. And when we get a cup and handle like this, anybody who knows the charts will tell you that once we break the neckline here, we're really good to go to the upside. The reason why we know that this is a cup and handle is because there are three levels of the handle that forms. The classic handle normally comes down to this 61.8 level. However, the cup and handle also qualifies if it comes back either to the 38.2 level, which it did here, or the 50% level. However, the classic cup and handle is the one that comes down to the 61.8. That would have formed a fantastic structure for us to bounce off here. But alas, we didn't get that. However, we did get a very big, strong bounce here, as you can see. So we've had 1, 2, 3, 4, and we're now on the fifth green daily candle, having now broken the neckline at the 43,000 level. And what I'm expecting now is that now that we've passed this neckline, we will come back and retest this at around about the $43,000 mark. I'm expecting a correction very, very shortly, and that's based on a number of factors. The first one is, if we have a look at the 50 moving average and the 200 daily moving average, if you zoom in on that, I've said in the past that once we get above the 50 daily moving average, I would go from being bearish here to being neutral, and that when we get past the $43,000 mark, I'll start to get confident that we've come out of this bearish phase. And it's when we get to the 200 daily moving average, and once we clear that, then we know we're back on the uptrend in the bull market, and we will now and we would see a continuation of the bull market. Well, we've now come right up to the 200 daily moving average, and as you can see, we're just coming up to that resistance at around about the 44,800 level. Now this is a critical level because you would normally expect a correction at the 200 daily moving average. So here I am expecting the price to come back down to retest this level here before we move on forward to the next level, which I'll do with the Fibonacci retracement. But certainly this is a key level we're coming up to. If we can clear this on a daily basis, so today's Sunday at 1 o'clock UK time, if this candle here closes above the 200, then I don't think we're going to get this correction here to retest this neckline to go up. I think we're going to go a bit forward higher before maybe possibly coming back to retest it. So this is a critical level we're at here. It can go either of two ways. However, I would expect a correction at the 200 daily moving average, especially when it's been in such a downturn for such a long time, that this is a key level, and we all know how relevant and important this level is. So a lot of people will be trading at these levels, many of whom will be taking profits because of all this rise that we've had in the last couple of weeks. So this is a great opportunity for those people to take profits and then buy back then. I'm not saying that's what we should do or you should do, but this is what people will do. The traders will do that. And then they'll probably rebuy back at the 42, 43 level before we take off again to the next levels. So what are the next levels? But before we go to the next levels, notice something very important here. If we look at the RSI, you can see quite clearly that we've gone from this point to that point and made a higher high. However, if you look at the RSI, there is a clear divergence. We've now made a lower high. And as we know with divergences, they do tend to play out. So this is one other reason why we could expect a correction at the 200 daily moving average. If the price did go much higher here and broke through this 200 daily moving average, then we would expect the RSI to go higher than this point here, which would negate the divergence, and then we would be good to go to higher levels. Certainly, this is a good point to take profits as well as have a correction, because we've had a very strong rally of the last 4 or 5 days to get to this level here. So what levels can we expect at the high side here? Well, firstly, if you do the Fibonacci retracement from the top here at 64,400 to the low point here, we can see that the 50% retracement level is at 46,852. But the golden pocket levels are at 51,118. So if we mark them in, so the golden pocket levels are 51,118 to 52,275. Certainly, if there's enough momentum, which there seems to be on here, the price may not stop at the 50% level, and we would expect it to go to the $51,100 level mark here. Certainly, I would be very surprised if we barge through this level here. As we know with Bitcoin, we tend to have a very strong affinity to the 61.8 level. And with a high degree of probability, I would say that we're going to get a correction at these levels, at 51,100 level, around that mark. So please keep that in mind. But certainly, I wouldn't expect the price to barge through the 61.8, despite all the strong rally and the strong momentum that's priced into the price action here. If we have a look at the pivots, it's not a surprise that the R1 line is at the 50% level here at around about the 46,000 level, and the R2 line is exactly on the 61.8. So you have a confluence of factors here. The Fibonacci retracement is telling you we're going to get corrected here and possibly here. And we know that from past experience that we do tend to get to the R1 line, but it's not always the case that we get rejected from there. But certainly if the pivots coincide with the Fibonacci retracement level, especially the 61.8, we would expect with a high degree of probability to get rejected there. So certainly 51,000 to 52,000, this golden pocket level is the key level as we're coming up back into the bull market. If we have a look at the volume, since we had this rally in the last week or so, the green spike candles are now starting to appear again. just like they were here on the way up. So certainly this is a good sign that we're now going to start seeing more and more of the green spikes on the volume chart. It's interesting if we have a look at the VPVR here, how it matches up with these three levels we've just drawn here. As you can see, there's hardly any space there, so we can expect the price to go up to this 50% level. We may get a rejection or some sort of a resistance here. However, as soon as we come up to past this level here, this is the Fibonacci retracement level. So it's all matching up. But once we get past this level here, there's no VPVR here, there's no volume here. Although we will get some resistance at the top, as we normally do, in terms of a double top. Certainly if we get past this level here, then we're good to go to much, much higher levels. So in the short term, as we can see quite clearly, we've had a very strong rally here. These are the levels to go for. This is where we're going to get a good resistance point and a correction at around about the 51, 52 mark. We may get it at the 200 daily moving average, which I'm expecting at the moment. Maybe not too much of a correction, just simply down to 42,000 to retest the 42, 43,000 level before we move up to the 51, 52. If we have a look at the weekly chart, something that we've been wanting to see for a long while now. It's very rare for the 21 weekly moving average to be breached like this with a close below it. In this 4-year cycle that we're in now, we've seen a series of weekly candles closing below the 21 weekly moving average. And I've said in the last few months since we broke this that we cannot resume the bull market until we get above the 21 weekly moving average. So this is certainly one thing I've been waiting for, and this candle closes tonight at 1 o'clock, but it looks with a very high degree of probability that we're going to now close above the 21 weekly exponential moving average. So on the weekly chart, looking very, very bullish for Bitcoin. If we have a look at the Bitcoin investor tool indicator, then you can see that once we get past this top red line here, we have a blow off top. And same here. Once we get past the red line here, blow off top. Red line here, blow off top. So currently, we're waiting for our price action, which is here, to get to the blow off top level, this red line here, at around about 98 to 100,000 currently. Now, as we know, when the prices are moving in the upward direction, obviously the red line, as you can see, takes a much stronger upward trajectory here. So as the price is going to be moving towards the top end here, we would expect this red line to be moving in this direction. So if we come to this line here, one thing we know with the Bitcoin investor tool is that as soon as we go past the red line, it's a matter of weeks before we have a blow off top. Let me show you. If we have a look at the last cycle in 2017, so at the end of 2017, when we had this blow off top here at 20,000, we broke the red line here. And if we measure that from this point where we broke out to this candle where we topped out, it was a case of 22 bars. That's 22 days. So it's 3 weeks once we pass the red line to the top. And if we have a look at the previous cycle to that, December 2013, when we topped off, as you can see, we broke out here. We broke out at this point here. And we measure from there to the top of the market there at around about $1,100 odd was 24 bars, 24 days, just over 3 weeks. You can see the picture why this red line is very relevant and important. We're currently here at around about 44, 45,000 here. Now we're making our trajectory more towards the upside here. So please be aware and make a mental note. Get onto this Bitcoin investor tool. Make sure you know these lines here. And one thing for sure is that if you look at all of these averages here in this Bitcoin investor tool, they have a very relevant and important role to play. So we're on the daily chart. As you can see quite clearly, when we came down to this line here, we found support. This line here was proving to be a very strong resistance. We came to this point here, again here, at the 37, 38 mark. And if you look a bit higher, we found support at the next line multiple times, and resistance here, support here. If we move further back, you can see why this is extremely important, this indicator. Look how much support and resistance we found here. Again, here. And there. So continuously, this indicator is proving to be extremely relevant and extremely important in terms of providing us with support and resistance points. So we need to be very much aware that as the price comes up, this line here, the white line, as we've seen before, here and here, that this is going to be a strong resistance. So currently that's at 55,000, but obviously as this moves up, the line will move up. So we're talking about up to about 58, 59,000. But the other thing to note here is that when we do come to this red line, we do find resistance points. And historically, we've always found that as we're coming to the blow off top, we get rejected at multiple points along the way before we have this blow off top. So we're going to find quite strong resistance at this red line as we approach it in the next few months here. So we just need to have that bigger picture view of this line here. So we're going to break this red line according to this kind of trajectory. So this could mean that we go up to 300 odd thousand dollars. A quick look at Ethereum. Now, if you've been watching my videos for the last year or so, you'll know that I've been drawing this chart over that period of time. And the most important line is this red line here. This is the long-term line that goes back to December 2016. As you can see, we had support there, resistance. And now, as this was moving up, I mentioned to you that we're going to be interacting with this line all the way up to our target of 21,450. So we've now just hit $1,700 where it bounced off from. And this was the line it's bounced off from. So you know that every time the price goes up and comes back down, you know that this line will prove a very strong support line. So if you were thinking of buying back, that would be the point. And while we're in this bull market, we're not going to do this and go below the line. That would be unlikely in a bull market. So this line is going to prove extremely important for Ethereum between now and the top of the market, which we're expecting here at around about the 21,000 mark. So on the longer term, on the weekly chart, you can see that we've now just started to take off there. So if we zoom in on here, we bounced off this red line here at $1,700 mark. When we come to this neckline here, we can expect a correction at around these levels here, at around about the 39,400 level. So I would expect a correction here to come back down and then make another attempt here, from which point we should be good to go towards the higher levels. So this is the overall bigger picture with Ethereum. We're good to go all the way up to the $4,000 mark as far as I can see here, because we've cleared this neckline here, these candles. The next neckline is that $4,000. So from between where we are now at 3,000 to 4,000, we should have clear sky ahead for Ethereum to go to these levels. I would expect a correction at this 4,000 level, then we're good to go higher from there onwards. If we have a look at the shorter term on the Ethereum chart, RSI is well above the 70 mark at around about the 80 mark here. And it may come back to test the pivot line here. The pivots are at around 2,400. So we could get a pullback, just like Bitcoin, with the 200 daily moving average. We could get the pullback here to the pivot line here, or even at the 200 daily moving average at 2200. So anywhere between 2200 and 2400 would be an ideal place for it to come back to. If we did a Fibonacci retracement on the Ethereum from the bottom here to the current top, you can see quite clearly that at the 61.8 is at 2278. So this looks like an ideal place to get a correction to before we move to the upside. A quick look at Cardano, and as we've shown you in the past, this was the neckline that we were needing to get past with a cup and handle here. So we came back down to these levels, retested them here, and once we broke through, that's where we got this amazing run that we've had in the last 8-9 months. Recently, while many of the other altcoins have come back to retest these levels down here, Cardano has only come back to its support lines here, which tells you very strongly that once we start moving up here, we're going to see another move very similar to this over here. So for me, Cardano presents an amazing opportunity to get in where we are now, to go to much, much higher levels. Finally, onto Marathon Digital Holdings, one of the Bitcoin miners that we cover here on this channel. I've been showing you this neckline, and I said quite clearly that when we came up to this line here, you saw that this was the bearish candle here, a rejection of higher prices. It's known as a gravestone doji, big sign of a reversal pattern to come. And you usually find these at the top of a rally. And as we saw, as soon as we got this, we started tumbling down to these levels here. So what's happened now is that we've now got a break of this neckline with this daily candle here on Friday. What we can expect is that perhaps we'll come back and retest this neckline around about the $31 mark before we go up. However, if Bitcoin goes higher on Monday, the Bitcoin miners only trade between Monday to Friday because they're not cryptocurrencies. They're on the NASDAQ, which operates only between Monday to Friday. So when the markets open again, at UK time 2:30, if Bitcoin is still much higher than what it was on Friday, which looks likely the case, we would expect Marathon to be much higher than the closing levels of around about $34, $35 mark. So let's wait and see, but certainly it's broken this neckline, and we know what happens when an asset breaks its neckline. As we saw back in August to November last year, as soon as we broke this neckline, we went above it, came back as support on the old resistance line, and boom, we went straight up. And this is what I'm expecting here. As soon as we break this line, which we have done, we might come back to test it as support, but if there's too much momentum in the market, it's just going to carry it straight up. So this would now present a fantastic opportunity to ride the Bitcoin train with the Bitcoin miners. And if you want to buy Marathon, you can go to any of my videos and go to the description box below the videos and click on the affiliate section. So that way you'd be helping the channel if you want to do that. But if you don't want to do that, you can still go to Etoro and sign up there and open up an account. Okay, on to our fantastic wisdom bite for today. In the last video, I covered an amazing principle. It was this magic phrase here: learn to work harder on yourself than you do on your job. If you haven't watched the last video with this wisdom bite, please go and watch it. It can literally transform your life. Just the gist of it was that if you work harder on your job, that will give you a living. It will put food on the table. It will pay your bills. It will give you a few holidays. But if you work harder on yourself, that will make you a fortune. And working on yourself means acquiring more knowledge, more skills, having a positive mental attitude, developing your character, developing your personality, changing your body language, all those kinds of things that we cover here on Wisdom Bites. It's all about personal development. Today, I'm going to continue that theme of magic principles that can totally transform your life. And today, I'm going to cover this one. This principle says we can't change our circumstances, but we can change ourselves. by changing what we do. So ponder over this. If you can remember one thing, and that is what you currently have at the moment, whether we like it or not, we have attracted that by the person we have become. Now, I know it's not very easy to blame yourself for where you find yourself, but we need to always take responsibility for where we are and how we got here, instead of blaming anyone else or any other circumstance. You see, this principle really explains a lot. It explains so much. One thing I find with people is that they're so confused about what they can do or what they should do in order to become successful. But if we can just sift out the fact that everything outside of you can't do anything about, but you can do something about yourself, and that is to change. The message I want to get through with this principle is this: we have to do everything necessary to become more valuable, not only to the marketplace in terms of making money, but making ourselves valuable to the world outside by changing our world inside. And if we do that, our whole life can explode into change. All we have to do is go to work on the right things. So what are they? Well, one of my mentors, Jim Rohn, he said, you don't have to go out there to change things. Like, don't try to change the seed, don't try to change the soil, don't change the sunshine, and don't change the rain. Don't even bother to change the mix of the seasons. Let the miracle of everything that's around you work for you. And all we have to do is work on the inside. So work on your philosophy, work on your attitude, work on your personality, work on your language, work on the gift of communication, work on all of your abilities. And if you will start making these personal changes, then without doubt, everything will change for you. I can tell you my personal story regarding this. Just over 30 years ago, when I left university with a few pennies in my pocket and absolutely nothing in the bank, my bank manager, Mr. Short, called to see me about an unarranged overdraft of £320. I'll never forget it, but let me tell you, I've never been in debt ever since then. And just after that meeting with Mr. Short, I came across this amazing book, you may have even heard of it, by Joe Carbo, The Lazy Man's Way to Riches. This book changed my mindset from that day onwards. And in a nutshell, he says that if you will change, then everything will change for you. Your outcomes will change, your results will change, etc., etc. And you don't have to change what's outside of you. All you have to do is change what's inside of you. And as Jim Rohn says quite clearly, to have more, you simply have to become more. All we have to do is work on ourselves. If we blame our circumstances for not being where we want to be, if we blame our parents, if we blame our school, if we blame the teachers, if we blame the politicians, always remember we are where we are by the decisions and the choices and the options we've taken. And if we choose to blame other things outside of us, like the government, like our family, like our circumstances, like our schooling, even the weather, then what you're doing is giving the power of change to something other than yourself. And what we have to do is take responsibility for where we are, and that way we can have the power to change, because then you're not waiting for anything else to change, because you have the power to change yourself. And on that note, I'll get back to working on myself, as there's a lot to work on. And if you found value in the technical analysis and the wisdom bite, then please do remember to like and subscribe and to turn on the notification bell. If you want to leave any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.